What's going on, guys? Just wanted to pop by here to give you guys a quick update on market conditions today. On the Friday, we had pretty interesting numbers on CPI and PPI showing inflation cooling down further. Macro backdrop really hasn't changed that much. I did post a little blurb on Discord about Fed liquidity. Those of you who are on Discord, please read what I post in the research reports and what my thoughts are on that. That might cause a little bit of a scare in the next half of the year based on outflows that I'm seeing. So please read what I said, and that should be something that you keep in the back of your head as we get into the second half of this year. So far, dynamics have been, from a technical perspective, honestly quite muted. We've seen whipsaws back and forth. Majority of the price action has been just kind of going in a zigzag pattern. But this megaphone wedge has still been kind of respected largely. The 4180 level still hasn't been retested, largely from our plan from this week, 4154 as well, which was the upside pivot. And then we have been locked in range at 4100 and 4060. So really not much movement here. I think obviously there will be movement in the next couple of days, probably maybe even today or Monday or sometime next week. The market is kind of digesting all the data. There's a big disconnect between macro and technical structure right now within the markets, which is causing a lot of this whipsaw movement back and forth, not to mention a lot of delta hedging, which is unwinding, and then also re-hedging. We'll also see OPEX next week or the week after, I believe. 1, 2, 3. It's actually next week, right? So third Friday of the week, next week 19th, I believe, or I could be wrong, maybe. Yeah, it's definitely next week, and that will cause some volatility increase heading into that week as well. So next week we'll have once again dealers kind of scrambling to move positions around, rolling positions, etc. And then the megaphone will probably get a bit larger here. So we will be watching very closely to see what dealers are doing with their positions. We have seen obviously some interesting options flow come in over the past couple of days, but nothing really that's kind of pointing out to us that this market is going to move in a specific direction just yet. The king of the castle, obviously NASDAQ, has still been on its tear to the upside. Majority of the moves on SPX to the downside this week haven't even phased this thing at all. So we're seeing potential retest of the 13,560, which I've been talking about for a very long time. Probably will happen today. And we'll have to see if we can break out of 13,700 to see further upside on tech. As we head into pretty much the tail end of this earnings season. Obviously, we have a couple of weeks more to go. And then the market's going to obviously make a decision on which direction it wants to kind of move. On top of that, we did see some bullish positioning come in for 180 calls on IWM for potential moves up into this range. But once again, this is something that we are still keeping as a back end kind of back burner play, because it needs to break out strongly from this range in order for it to actually do something. The VIX still muted below $17. And the U.S. 10-year yield, still kind of around the 3.414 level. A lot of bonds being bought up in the past couple of days, just in general across the board. So we're seeing yields come down a little bit, but still locked in range. No real development here on the yield side, by the way, just so you know. We did see obviously some of the 1 month yield get bought up, which means they're selling 1 month bonds. A little bit of uncertainty there. And of course, rest of the yield curve really just is the same. It's not really made any developments whatsoever. So I'll have more updates once I see something that's a bit more prevalent. We'll also get more information when we see more movement in the dollar as well. The dollar has been creeping up here in the past 2 sessions, which has been an interesting development for these past 2 sessions. So with the dollar creeping up here, it still needs to break out if it wants to make a significant impact. But right now it stays kind of lockstep, moving sideways, and we haven't really seen much development here. The dollar moving sideways also is another reason why we're seeing a lot of this stunted price action as well. Consumer discretionary, this is the main sector that I want to bring your attention to for this week, or rather to close out this week. This sector has been in a range for a very long time, and we have been speaking about this sector for a while. Amazon and Tesla being 2 of the leaders within this sector. We're seeing a nice little ascending pattern here that is forming for a potential breakout into the upside, targeting 153 and then 154, 157, eventually 158 at some point. You can see Tesla up here pre-market a little bit, kind of pulling back, and from where we talked about on Monday, it has made some significant upside. As I mentioned, pretty high chance for a 180 retest, a potential retest, but we need to break through 176, 177 first for that to happen, and it hasn't really been able to reclaim this range at 175. So that's something that has been, just something talked about. Swing trades wise this week, we had 3 ER plays that hit perfectly, although one of them is still playing out. HRB. We took Celsius calls. This posted monster earnings. Stock was up massively, almost 20% the next day. So this one paid out nicely. And then we also played Unity, which was also a great one. And that one also played out pretty nicely, up pretty decent, 12%, 13% on the day. So next week, we'll see if we have any other earnings plays that we want to take. But so far, these were the ones we took this week. And yeah, that's pretty much what I wanted to bring your attention to for today. Now, for today's session, I think maybe concentrating on the ones that are moving, like the Amazon and Tesla, are probably your best bet. But since these are approaching key pivot points, you really kind of want to see how they react when they start to break those. So I think as we start to break those levels, then you might want to consider on pullbacks, or if you want to take the rejections off them and see the cadence the NASDAQ has if it is approaching the resistance at the same time. You can time those cycles up and potentially take a rejection or a rally past the key pivot point. So you'll have to look at that either way. Yesterday we started a bull position on BABA, which is pulling back here pre-market, but on the 9988 Chinese equity side, it was looking pretty good. We'll see if it can continue to the upside today, or if it's going to pull back and give us a potential other entry, at sometime during the week next week. So I'll be looking at that as well. Netflix also broke out from the pennant here, and this was one of the trade of the weeks on the newsletter, so I hope that you had a look at this one as well. Failed to break down the 316 level, formed a nice base, and is looking like it wants to break further to the upside. So we'll see if this can actually capture that upside further. But I just wanted to give you guys my quick thoughts on the market before you guys head onto the session. And hopefully this will help you on your journey today. If you have any questions, comments, concerns, make sure you post it in the comments below. And I will get to it as soon as I can, or just message me on Discord or Instagram, and I'll be happy to answer your questions. So from a macro, micro, technical perspective, we'll have to see how this plays out heading into the next week. And I wish you guys a great weekend. So take care and peace out. I'll see you guys back on Monday.